oil lower this morning. Brent crude briefly trading just below. It's still right above $80 a barrel here. You've got crude also off just around 2.5%. We're seeing this reaction after OPEC Plus agreed to extend group-wide production cuts into next year as it attempts to support prices. Joining us now from the outlook of the crude markets, we want to bring in Bob McNally. He is the founder and president of Rapidan Energy. It's good to have you, Bob. So let's talk about some of that, the market reaction that we're seeing here in the oil markets. You're looking at this, it almost seems like the street at least is looking at this from a bearish perspective. Is that the right reading?
You know, good to be with you. I don't think so, but you know what? Reasonable people can differ. Yesterday's decision had a lot of moving parts. Some of them were supportive of price, like extending 3.7 million barrels a day of cuts that would have expired in December 24 through 25. So that was unambiguously bullish. But they also came out and said, look, here's our schedule for tapering about 2.2 million barrels a day of cuts that were extended from June till October. So the appearance of a detailed monthly tapering schedule over 12 months, that I think caught folks by surprise and has the bears thinking, uh-oh, they're going to be adding back barrels. In my view, OPEC is willing and able to pause or reverse any tapering. I don't think they're going to let the bottom out of this price of crude, but it's understandable why some folks are taking it bearishly today.
So what would you say to those folks in terms of your number that you think that we're going to get in terms of per barrel moving forward? And what do you think the biggest catalyst for that is going to be?
So, you know, we're telling clients we're in a range. We're in an $85, $90 average Brent range. The downside risk and the pressure on the markets clearly from macro. You know, everybody has to be a Fed watcher these days. Huge macro risks on demand. Demand has not been great this year. You just saw the PMI came out. Diesel demand, which is the economic fuel, not good. China, weak. This is why OPEC Plus had to extend these cuts. So look, there's real downside risk and pressure on the price of oil, mainly from macroeconomic conditions. And your upside risk is mainly from geopolitics in the near term. So far, the market has shrugged off disruption risks, whether it's Ukraine or Israel, Iran related. I still think there's risk, particularly with regard to Israel and Iran. But for now, the market's in show me the barrels mode. So I think we're range bound with macro pushing prices down and geopolitics posing some latent bullish risk.
Bob, why do you think the geopolitical risk has been shrugged off, what you were just saying? And I guess what is going to then be the differentiating factor for the market to react to some sort of development?
You know, traders are in a boy who cried wolf mode, right? In 2019, Iran attacked Saudi Arabia, massive disruption, largest ever open on a Sunday for crude oil, but didn't last that long. Then when Russia invaded Ukraine, everyone thought we're going to lose Russia. We saw record gasoline prices in the United States, didn't have a disruption in Russian oil. And Iran's been hitting boats and ships from time to time without any lasting disruption. So the market, I think, is like, you know, I'm just not going to believe it until I see it. And even when Israel and Iran traded blows, direct attacks recently, again, those did not escalate into a material disruption of Arabian Gulf flows. Finally, Red Sea, yeah, it's bad. No LNG is moving through the Red Sea, but the market is optimized. We're diverting around it. After all, the Red Sea is just a shortcut, and you can avoid a shortcut.
Bob, you were the former White House energy advisor. You've said that rising oil prices are understandably an existential crisis for politicians. If you were in that role today, and given that President Biden is also in the middle of an election cycle, what would you be advising him?
Well, you know what I learned in the White House, and I would advise any president, is the biggest thing you can do is not make mistakes. And one mistake would be to spill more strategic petroleum reserve barrels. That's just a bad idea. I commend the Biden administration for trying to refill the SPR, which they're doing. That's the right thing to do. Don't take the bait and use the SPR to try and control gasoline prices, as the president has done, unfortunately. Second, he's going to be getting a lot of bad advice if oil prices go up. That includes to restrict exports of refined products. Like we export a lot of gasoline and diesel, including to our allies and friends. Some protectionists will say, hey, let's cut off those exports and keep them at home. Really bad idea. You'll get about 2 days of relief at the pump, and then we'll be worse off because you'll have less investment and higher prices. So avoid mistakes. That's my main advice.
All right, Bob McNally, Rapidan Energy founder and president. Thanks so much, Bob.